Hey everyone, welcome to the KE Report. Another daily editorial chatting with John Rubino. We're going to be more focusing on the precious metals. Bit of a move higher that we're seeing today with gold up about $25. Silver is the one that's performing quite well, up over $1, over 3% higher, right in the mid $32 range. You can follow John on his Substack account by clicking on the link in the show notes. So, John, look, gold, silver, they're doing well today without a whole lot of other kind of market moves. The dollar is flat, interest rates, at least the 10-year is actually up. So, right now, it seems like this move is strictly investors seeing something in the precious metals to move it higher. John, what are you seeing in terms of news that you think is causing this buying to come into the precious metals?
Hey, Corey. Hey, Shad. Yeah, part of it is probably China just resumed its gold buying after, I forget how many months, maybe 6 months or something like that, where they didn't report any buying. But with China, you never know because they kind of do what they want to do and then they report it when they feel like reporting it. So the fact that they aren't reporting gold buying doesn't mean they're not buying gold. And apparently, yeah, there were a lot of stories just lately about China's secret gold buying, but they actually did just come out and report more buying lately. And that's a good thing because the central bank buying has been the big story for gold and silver over the last couple of years, really aggressive central bank buying. It's kind of tailed off a little bit in 2024, but not that much. It's still, I think it's going to be 600 tons or something like that when all is said and done, which is still a big number that didn't exist at all 6 or 7 years ago. The central banks went from being net sellers to net buyers and then to big net buyers. Another possibility for precious metals is that another theater opened up in the Middle East. Syria just out of the blue fell. And now you've got Israeli soldiers in there and Russia soldiers pulling out. And so we don't know what that's going to turn into. And we don't know the nature of the people who are taking over Syria, except that they're probably not consistent with Western democracies ideologically. So that's another thing. We've got so much geopolitical stuff going on that I think we're reaching kind of the straw that breaks the camel's back kind of situation with geopolitics, where the next thing could be the thing that spooks everybody, and there's no way to know that. And so this Syria thing could be playing into gold and silver, and then silver is outperforming gold, which is the way it's supposed to be at these kinds of price trend levels. And partially, probably the reason for that is that Russia recently decided to add silver to its strategic metals reserve, and India has been aggressively buying silver with really big increases year over year. So put it all together, and silver is such a little, tiny, thin market that it's not a surprise that it's moving in percentage terms faster than gold right now. And so here's hoping that keeps up too, because that's, if it's happening like that, that's a normal precious metals bull market. And it's been kind of an abnormal market up until this point, with gold doing really well and silver not really getting excited the way it usually does when gold does as well as it's doing now. So maybe this is the beginning of that normal market in precious metals, where gold goes up, silver goes up more, and the miners go up even more than the metals. So here's hoping.
Well, John, yeah, I think a lot of people listening would like to see that kind of an environment, that what we would call quote unquote normal, where you see silver outperforming gold and where you see the mining stocks outperforming the metals. On a day like today, it is nice to see that kind of action across the sector. But one thing I wonder is just, we're here in December. We probably won't talk to you again until the first of the year. So when you look at this year in review, John, gold has done incredibly well. It's actually done better this year than it's really done almost any other year in recent memory. Silver's had a pretty good year as well. I mean, it was in the low 20s and now it's in the low 30s, and it actually got up to 35 just a couple months ago. It's back above 32.50 today. So all in, gold and silver have had really good years. I think a lot of people would have expected that more normal mining outperformance, and we haven't seen it. But I wonder, with the producers, with gold and silver producers all making money at these levels, can they continue to crank out some good quarters in Q4? And as we round out the year and turn into Q1 of next year, if we keep seeing a pattern of gains and revenues and profit generation, is there a point where more people outside the sector start saying, hey, you know what? these gold and silver mining companies finally have their ships turned around and they finally are making money. Do you think that finally weighs on the generalist investor's mind, or are they just too distracted with too many other sectors?
Well, there is a lot of distractions out there right now. I mean, in a world that has Bitcoin and Nvidia in it, gold going up by $600 an ounce in the last year or whatever it was, doesn't seem that remarkable because it pales into insignificance next to what Nvidia did or Tesla, or there's a lot of things out there just rocking right now. But you're right, it was a really good year for precious metals, and it was a pretty good year for the miners. And the problem with the miners is that their costs went up enough to offset the early gains in gold and silver. So they didn't actually early on report spectacular earnings, as you would expect normally with this big of an increase in the thing that they're selling. But Q2 revenues benefited from higher gold. Q3 revenues benefited, and for some of the well-run miners, some of that revenue increase actually made its way down to the bottom line, and cash flow was up. So it was a quarter with some pretty decent, unspectacular, but decent earnings numbers. Now, Q4 is probably going to be better, even better, because first of all, gold kept on going up. Newmont's Q3 average gold price was $2,500 an ounce. And now we're at around $2,700 an ounce, which means fourth quarter average gold number is going to be much higher than the third quarter's was. And oil, meanwhile, is actually down. So the energy cost component for a lot of the big gold miners will be reasonably well behaved. So it could be that we see a widening of margins with fourth quarter numbers. And maybe that's enough to start generating some interest here. So we'll see. But the Q4 numbers ought to be pretty good. And we can't predict the response of investors to those pretty good numbers. But eventually, pretty good numbers generate higher share prices. That's just how it works. And the timing isn't always predictable. But I think it's completely possible that the first quarter of the year of 2025, when the Q4 numbers come out, is a pretty good one for the precious metals miners. So we'll see. But I think that's not an unreasonable prediction based on what we know is going to happen with revenues and in some cases earnings. So again, here's hoping. Things haven't quite gone the way we'd hoped they would over the past couple of years. But the overall market in precious metals, the overall tenor of the market, thanks to gold doing what it's done, is pretty good. And that should be reflected in the miners' share prices in the not too distant future.
But John, hasn't this year been good for the share prices? I know everyone always wants higher share prices, but outside of, I guess, a number of juniors, pretty much every stock is higher and has benefited from these higher gold prices.
Well, yes, higher, but not spectacularly higher. I mean, go back 3 years and pretend we were predicting $2,700 gold for 2024. And, the three of us would be predicting massive increases in the share prices of the mining stocks. We'd be mortgaging our houses to buy the miners, which still wouldn't have been a bad thing to do. But, it hasn't been as spectacular as you would expect. And in a lot of cases, there's a lot of miners that in percentage terms did not go up as much as gold did still, which is just bizarre with as much as gold went up. I think there's a lot more to come if margins start to widen out. So what we basically need is for the miners to start showing up on generalist investors' momentum screens, and not just for stock price, but for margin widening and earnings increases and things like that. And it could be that the Q4 numbers are good enough to make that begin to happen. And it doesn't take much generalist money to really light a fire under mining stocks, because that's such a small sector compared to a lot of other sectors. So we'll see. But yeah, we don't want to minimize the fact that some of the miners have done pretty well. I mean, my list on my Substack shows some of the bigger miners, and especially the ETFs. The ETFs have done much better than the miners, the actual miners that I've listed. And a lot of the, for instance, the royalty streaming stocks aren't even up from 2 years ago when I put them on the list. There's some that are still down, and there's some other ones that are up, 8%, 12%, something like that. Given the gold price, I would have expected a lot more. So that means that we can expect a lot more if normal trends take over in the not too distant future. So it could be, there's a lot of other stuff that is likely to happen in 2025. So there are cross currents out there, but other things being equal, there's a decent chance that the miners start behaving the way they ought to behave in this kind of a precious metals bull market.
Well, and John, it's an interesting environment because when you look at the ETFs, they've done good and they have gone up, to your point, not really leveraging the normal moves we normally see in the mining stocks compared to the metals. But within that, there are stocks that have underperformed some of the larger ones like the Newmonts and Barricks, but there also are stocks like Agnico Eagle or Kinross or IM Gold that have just blasted higher. Alamos Gold has just blasted higher for years. So there are stocks that have actually broken out to new all-time highs in this environment. And then yet there are stocks that have corrected down even despite the higher gold prices. And there are some stocks that just kind of went up a little bit, but not maybe didn't even keep pace with gold. Is it become more of a stock picker's market where people have to be more selective? Or your point on the royalty companies, you would have thought that the margins for the royalty companies having gone up so much that they would be up bigly right now, and they're not. So is this a situation where investors have to be more cautious what they put in their portfolios and really do the due diligence? Or do you think we're getting ready to shift next year into a situation where the rising tide does finally lift all the boats? Is this a situation where the whole sector flies, or do we still have to be a rifle approach?
Well, see, that's the interesting part, or one of the interesting parts of the story, is that you really needed to be a stock picker going forward, or just an ETF buyer, those two extremes. But if you just kind of generally bought individual equities, you had a mixed bag in the last couple of years. But there comes a time in a bull market when, no matter what you buy, just anything with the right name tends to get swept up in the excitement. And actually, especially with the little stocks in gold and silver mining, the juniors and the explorers, the worst names, the least well-run companies whose stocks performed most badly in the few years leading up to the bull market tend to do best because they've got the furthest to run, and generalist money is just coming in and buying things with silver and gold in the name without really doing any serious due diligence. And so these little beaten down stocks can outperform the high quality names for a year or so, and that's probably coming too. So it could be that for us to say, well, you've got to be a stock picker in this market is a little bit late in the process. And it could be that just any old thing goes up over the next couple of years. Again, if gold and silver continue with their current trends, if we have that parabolic blow off top that you get towards the end of precious metals bull markets, then you just need to be in the sector somehow, some way. It almost doesn't matter what you're in. But the reason you go for quality in general, and you should always go in for quality, this idea of buying the crappiest names is just, that's rank speculation. Because if you're wrong in the timing and you're in crappy names, those things go to zero, they just disappear. But if you're in high quality names, if you get that parabolic blow off, they might not go up as much as the crappy names do. But if parabolic blow off is a few years in the future, then the high quality names stick around and might even pay you some dividends or something like that while you wait. So you always want to be in quality. And the question this time around was, what is quality? Because a lot of the big names you named just lately were previously considered to be quality names, and they just didn't do as well. So you really needed to be able to project profit margins for a lot of these guys over the last couple of years.
John, look, the whole fact of the matter is if we want this rising tide lifting all ships, you can make an argument that a lot of companies have revalued, especially market cap wise, over this last year. But we go back 9 years, gold is up about 3 times. Just in the last year, gold was up about 50%, little under 50%. This has brought in some investors, but again, it hasn't just caused this euphoric move where everybody is rushing in. And the underlying precious metals price is kind of that barometer for growth in the sector because that's the product that gold companies are selling. And what needs to happen here, John? Does gold need to double or triple just in a year to actually bring this interest in? Or do we need to understand that the market isn't going back to the way it was back in the 70s when some of these gold names and ETFs were newer?
Well, gold tripling would absolutely do it. But the problem this time around is margins. And the problem with margins is costs. Mining just became a much tougher business. It's always been a tough business, but lately it's become tougher because wage costs are going up and energy was much more expensive. And tax regimes have changed in various countries. And grades are lower than they used to be. So you put all that together, and it's harder for miners to make the kind of money you would expect them to make given where gold is now. But the best run companies that are best able to control their costs have generated higher margins and higher earnings and more cash flow. And it's reflected in their stock prices. So, you got to think that the companies with the margin issues and the cost issues are doing their best to address those things. And it's possible that some of them are going to succeed, and we're going to see a widening of their margins and an increase in their cash flow. And it might come as a surprise to a lot of people who have just looked at Barrick and thought, okay, look, these guys just are never going to make any serious money. And all of a sudden they do, and then their stocks make up lost ground. So that's a possibility too. So, it's coming back to the whole stock picking thing. We actually have to do some serious security analysis here instead of just buying the glossy names in a market that we know is going to go up. And that's not easy. I mean, if you look at Newmont or something like that, how do you analyze a company with 10 tier 1 gold mines scattered all around the world? That's a massive piece of analysis there to figure out how they stack up against Barrick's tier 1 mines all around the world. It's not easy. And I almost think that for the average person, it's not worth the trouble. The return on your analytical time isn't necessarily significant because the analysis is so hard. You're liable to come to the wrong conclusion, even if you really dig into it. So I think security analysis probably pays bigger dividends as you go down the food chain. Junior miners with like 1 or 2 mines, it's relatively easy to run those numbers. And with explorers, I've had some bad experiences with explorers in the last couple of years whose stories just sounded phenomenal. And just the runway wasn't long enough or whatever, or, the financing costs were just unmanageable. So I've been taking some of the quote unquote failed lottery tickets out of my Substack portfolio. I'm still showing them at the bottom of that page, but they're not in the recommended list anymore. And so anyhow, that's a long-winded answer, when the actual answer is that the highest quality companies are still going to do great in this sector. So we have to be able to identify the high quality companies.
Well, John, I think you made a great point about looking for the companies that are going to have margin expansion. And with Newmont divesting a number of its projects and cleaning up its balance sheet after the merger with Newcrest, hopefully they get to that cost point where their margins have expanded. Maybe they surprise in Q4. It'd be nice to see that. But I guess this brings in the larger discussion of cost creep in the mining sector. It's always something that has to be dealt with. And is that outpacing the increase in the metals? How do you look at inflation moving forward as you look into next year, as you look at the macro tailwinds and headwinds? How do you think inflation ties into the overall economy? But obviously that trickles down into these margins.
I think wage inflation is a big deal going forward, because especially in the US, we're moving factories back here. And we're creating conditions in which unionized workforces can demand way higher wages, and they're getting it and everything. So you're seeing double-digit wage increases all over the place. And probably the same thing is happening in mining, because you got a whole generation of mining engineers who are retiring now. And the pipeline of replacements is not that full. So there's kind of a scramble for really good talent in this industry, and which translates into higher wages, So it's not clear how the wage cost thing plays out in mining, but you can look at the oil price and say the energy cost part of the equation is pretty well contained. I mean, oil was 80 something dollars a barrel a year ago, and now it's, what was it today, like $67 for West Texas Intermediate. And that's got to translate into, if not lower fuel costs and energy costs for the miners, at least well behaved. They're not going up as fast as they used to. And that might be enough to widen margins out for a lot of these guys. We'll have to see. But I think the Q4 numbers are going to be really interesting because we saw the trend take place in Q2 and Q3, where margins did start to widen for the best managed companies, and that translated into reasonably well-behaved stock prices and things like that. And maybe lower oil, higher gold really broadens the margin widening thing throughout the industry. And if that happens, that's the kind of thing that's really exciting for generalist investors. So you could see a lot of money coming in where, because of what they've seen with Q4 earnings, they don't feel like they have to be that discriminating, and they just start buying whatever has gold or silver in the name. And that'll be fun when it happens. And I think it could start pretty soon, given how much higher gold and silver are than they were in Q3 and definitely in Q2.
Oh, we'll see how it all plays out. But look, these companies already have arguably historic margins, especially on a dollar-based figure. But investors have done well in some of these stocks. I think some of them have come into these stocks, but fact of the matter is, yes, it's not the same sort of bull run that we have seen, but argument being that can also be late cycle moves too. So, hey, John, we will see where this leaves us, and we'll see where the precious metals price goes, because that really fundamentally is the best thing that these miners can hope for, is simply higher prices. Again, everyone, click that link in the show notes to follow along with John on his Substack. And John, I hope you have a very happy holiday season. We'll chat with you in the new year.
Thanks, guys. Happy holidays.